Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 6th, 2017. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, we've got pretty significant resistance at the 95 level on the US dollar index, but clearly the VantagePoint software is still pointing higher on the dollar index. You can see that we're bouncing off that critical 60 level on the predicted RSI, our key 18-day predicted moving average coming in at 93.92. But certainly the very, very strong non-farm payroll number coming out of the US on Friday. The market, I don't feel has completely digested that number as of yet, and we're probably going to see a significant move to the upside in the dollar in the days ahead. Now, that may not happen on Monday or Tuesday, but it is likely very, very positive for the US dollar. Now, with the US unemployment moving down to 4.1, the U6 number now below 8 million, very, very strong. The economy seems to be firing on all cylinders. And that, of course, is putting pressure on the euro currency. When we look at the euro-US pair, we've had a significant failure at 116.99 on the VantagePoint 18-day predicted moving average. The majority of the indicators here are signaling the euro is going lower. If we lose this very heavy support level at 116, that will trigger potentially a move down into the 112 area on the euro. The euro definitely under pressure here. When we look at that via the US Swiss franc, we can see a very, very strong call from VantagePoint, actually dating back to mid-September. The buy signal here, we've had multiple retracements along the 18-day predicted moving average, only to see the pair rise all the way up to parity and above. Next week, we are likely to see buyers come in here very strong on any kind of pullback towards 99.83 and the 99.02 area, with a very close of just slightly above parity, but very strong support down here to the 99 level. Definitely we would be buyers down into that level. Now, the British pound this week, initially we had a nice move to the upside, but then the Bank of England kicked in and basically suggested a one and done rate hike that put immediate selling pressure on the British pound. When we look at the additional indicators, the predicted MACD is signaling we're going lower, as is the predicted RSI. So the sellers, I don't think, are quite done with this pair yet. We're probably going to see a move lower, but watch the 130 area very, very closely. We're looking for a multiple day close below 130. That's probably going to trigger a move potentially down into this 128 area. Now, nothing is for certain. In my opinion, once again, the market has misinterpreted some of the comments made by the Bank of England, but that's why we avoid trading in situations like that, because you buy the rumor, you sell the fact. It's a cliche, I know this, but it's true. The market is now nervous that there will not be any more rate hikes, and that's it. So right now we're basically moving sideways to a downside bias on the British pound. We do have a fresh triple EMA cross, but again, problematic because it's based on potentially a misinterpreted fundamental from the Bank of England. Now, as we come into the dollar-yen pair, we can assess here the key vantage point level comes in at 113.37. Longs down to that level is definitely a reasonable play. We can assess that we have significant trend line resistance coming in at 114.30. When this level breaks, guys, and if we can break above 115, that is going to signal a move probably towards 116 or 117. There's very little reason at this particular time to be buying Japanese yen, particularly against the US dollar. As the global equity markets move higher, everything is looking much better in the US, the employment situation. So again, most of the indicators from VantagePoint are suggesting that we are going higher. When we come into our commodity currencies, I don't think they're going to have a very good couple of weeks, or not a very good month of November, in my respectful opinion. The Canadian dollar is sold off based around the Canadian unemployment report. But guys, what I want to point out here, the U.S. unemployment rate went down to 4.1. The Canadian unemployment on Friday actually went up from 6.1 to 6.2, I believe. So this is not a good number. Now the headline number out of the US was out of Canada, excuse me, was 35K new jobs. But the fact of the matter is, if that's true, the unemployment rate would not be going up, it would be going down. So I believe that this area around 127 is likely to hold. My only concern is rising oil prices. If oil prices continue to push higher, that will put a temporary bid into the Canadian dollar, which could send USCAD lower, but ultimately, guys, we're looking for a buying opportunity. With Aussie US, very strong support here at the 76 level. We'll see if that's hold, but the VantagePoint 18-day predicted moving average at 77.31 continues to hold on any retracement. We can assess here, zooming in these charts so everybody can see this. We've had two tests of this key VantagePoint 18-day predicted moving average. Both times we failed at this level, 76.85, 77.31. Selling into that area is still reasonable, as I'm anticipating, based on the intermarket correlations, that gold will move lower in the days ahead. The same thing applies to New Zealand. Now, New Zealand could have a little bit more of a bid to it than Aussie US. Basically, this is being caused, or could be caused, by Aussie New Zealand. The cross pair, as people sell Aussie against the New Zealand, they have to use the major pairs. So we have, again, very significant trend line support at the 68 level, but now we're caught right up against that key VantagePoint level at 69.52. Only a sustained break of that level will take the pressure off the downside on this particular commodity currency. So we will have a choppy week ahead with all of these central bank announcements, the unemployment announcements, but once the market digests everything, it's likely going to favor buying US dollars.